What distinguishes Regeneron Pharmaceuticals? Price Target Research tracks 6,000 North American traded companies on a regular basis, constantly looking for new stock market winners. Our initial selection criteria include adequate company size and liquidity, recent better than market stock price performance, and a high value trend rating. Income orientation and risk are also considered when appropriate. Important additional considerations include favorable improvement in earnings estimates, recent company sales and earnings acceleration, adequate liquidity, attractive longer-term market success, and finally, favorable performance of other members of the company's industry group. Regeneron grades out very well on these criteria. Our appraisal of potential stock price performance relative to the company's peer group and the overall stock market is based on three key drivers of value: growth, profitability, and risk. Key Regeneron characteristics include high financial strength, high expected growth, high stability, and only average profitability. A big positive influence on Regeneron's valuation is its superior growth. Welcome to Price Target Research. I'm John Lafferty. Regeneron Pharmaceuticals discovers, invents, develops, manufactures, and commercializes medicines for treating various diseases worldwide. The company's products include injection treatments for wet age-related macular degeneration and diabetic-related macular degeneration, as well as a variety of other treatments for maladies of the eye. Regeneron is traded on the NASDAQ Stock Exchange with the ticker REGN. On February 2nd, the company closed trading at $945.18 with a market cap of about $101 billion. At the current price of $945, what are the market's expectations regarding the company's future operating performance? Over the next 6 years, Regeneron Pharmaceutical shares will need to reach $1,585 to achieve average annual stock market performance of 9%. The company's stock price will need to reach $1,866 by 2028 to achieve upper quartile performance. The quartile chart is an essential tool in producing Price Target's valuation scorecard. For each metric included, performance of a company in the peer group is ranked high to low and quartiles determined. The high end of the bar is top quartile, the bottom end represents lower quartile, and the line in the middle is median performance. The company's value is determined and converted to a percentile, also plotted as a red dot. A company's investment profile is reflected in quartile charts. 4 categories: valuation, growth, profitability, and risk encompass 12 investment variables. Regeneron's investment profile is very sharply drawn. A large number of characteristics stand out relative to the market. The company's low dividend yield, its high financial strength, its low stock price volatility, and its low financial leverage, its high market cap, its low expected growth, its high historical growth, and finally its low earnings variability are all extreme. Relative to the S&P composite, Regeneron has neutral growth value characteristics. Its appeal is likely to be to capital gain oriented investors. Regeneron is of the highest investment quality. Regeneron Pharmaceuticals peer group consists of 14 companies that have very similar investment and operating characteristics. Relative to the peer group, the company has average valuation but leading shareholder returns. Current valuations are average relative to the peer group. Recent market returns, as mentioned, have significantly outperformed the Regeneron peer group. Relative to the S&P 500, the company's overall valuation is quite high. Current annual total return performance of 24.3% is upper quartile relative to the S&P. Current 5-year total return on an annualized basis of 17% is also upper quartile relative to the S&P. A company's intrinsic or sustainable growth rate reflects such physical things as units produced, customer counts, square feet, and head count. PTR's appraisal of growth starts from this perspective. Our analysis of Regeneron's growth involves the balance sheet as well as the income statement, because intrinsic growth is reflected in the growth of balance sheet, measures such as current assets, gross plant, and shareholder equity. Equity growth, earnings growth, asset growth, and revenue growth have all been superior for Regeneron. These factors avoid market perceptions of the company. Regeneron's historical income statement growth has been lower than balance sheet growth. Its revenue growth has fallen short of asset growth. Earnings growth has fallen short of equity growth, driving an erosion in the company's return on equity. Regeneron's consensus growth rate forecast, which is the average of Wall Street analyst forecast, is 4.1%, substantially below the average of the historical growth measures. On the other hand, our growth rate forecast of 25% is substantially above the consensus and in line with the average of the historical growth measures. Companies create wealth by investing capital at rates of return greater than the cost of capital. In general, the greater the difference between the rate of return and the cost of capital, the greater the wealth generated, and the higher a company's stock price and stock market valuation are likely to be. Thus, return on capital and return on equity are extremely important in understanding a firm's performance on behalf of its shareholders. Regeneron's return on equity has improved significantly since 2013. The current level of 16% is slightly above the low for the period, about 25% from the high. A major analytical focus for Regeneron is a minor negative trend in pre-tax operating return, significantly offset by a very strong positive trend in those non-operating factors. The productivity of Regeneron's assets declined over the full period between 2013 and 2023. Asset turnover suffered a very strong overall downtrend. Partially offsetting that trend, however, was the fact that pre-tax margin enjoyed a strong overall uptrend, although it experienced a very sharp decline after the 2021 high. The company's pre-tax margin is group leading. Its asset turnover is group lagging, however. The company has normal cash needs. Our return on equity forecast is 15%, below our recent forecast. A dramatic erratic decline between 2014 and 2022 happened, and our forecast is significantly below the 2014 peak of 40%. Regeneron's risk profile is favorable. Its overall variability has been quite high, with very high revenue variability, but earnings variability has been only average, and stock price volatility has been quite low. The company's financial strength is relatively very high, and earnings expectations are also relatively high. The company's debt-to-capital ratio, on the other hand, has risen somewhat. Relative to the Regeneron peer group, the company's wealth creation profile is very favorable. The profile is based on measures of warranted value, appreciation potential, and total shareholder return. The rate of change in the company's warranted market value is relatively very high. Its appreciation score is also relatively very high as a consequence. As mentioned earlier, its 1-year return to shareholders has been relatively very high, and the 5-year return to shareholders has been also very high. Total shareholder returns for the company are expected to significantly beat the overall equity market. Based on current investor expectations, Regeneron shares should reach a level of $3,356 by 2028, a 23.5% per year total shareholder return. A 2028 stock price of $15.85 would reflect median performance, and a price of $18.66 would be required to reach upper quartile performance. ETR's value trend rating is the overall measure of a stock's attractiveness relative to a universe of all companies traded on North American exchanges. The value trend rating combines the appreciation score that measures a stock's appreciation potential relative to the universe, with 0 being the lowest and 100 the highest, and the power rating that measures its current timeliness, 0 again being the lowest, 100 the highest. High value trend rating stocks are expected to lead the general market, while low value trend rating stocks are expected to lag. Regeneron has a current value trend rating of B, which is positive. It has a slightly positive appreciation score of 62 and a good power rating of 81, resulting in the positive value trend rating. The value trend rating identifies groups of companies at stages when individual company performance is reflecting significant change. As a consequence, a given value trend rating can persist for a relatively long period of time. It goes without saying, however, that ratings for stocks of interest should be reviewed regularly. Regeneron's rating history has been stable. Over the last 41 months, A or B rated categories have been the largest rating category at almost 80% of the months. Well, that's it for this valuation scorecard for Regeneron Pharmaceuticals. You can find additional company research and current value trend ratings on our website at pricetargetresearch.com and more videos on youtube.com/pricetargetresearch.